following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back Wednesday morning. And let's take a look at crude oil really quick. 48.71. Again, this is the instrument du jour. 48.71. We talked about that being the targets up top on that breakout on our intermediates, and that really has held nicely. But down below, we got 43.23, that POC on the weekly. And remember, we're looking at wide profiles, paying attention to those POCs. And the good news is 43.23 is very, very close to 43.38 on the where the breakout really started happening on the intermediate. And if you go back in time, we're going to take a look at this and see, we can go way back in time and see where on the weeklies, crude oil started doing that breakdown around 100 and really hasn't looked back since then. We've been looking for resistance areas to sell all the way down. This is the first real decent hint we've had in a long time since March on crude oil. I was just checking my Chuck Norris workout video over there. On crude oil, we had the intermediate happen again on the breakout side, and we retested, we went up. We talked about this yesterday and the day before. We talked about, let's just wait patiently until the market comes to us. And guess what? After those massive pullbacks we've had, after that, breakout we've got the low today, 43.86. So we're in that neighborhood where now, in my opinion, we've got a decent trading opportunity on the long side. This is not a big bounce type situation, but I think you can put some stops below this 43.38, 43.23 little DMZ, as I like to call them down there. So remember, we're still in the balanced area on the long term. Not a lot of new things, even with the volatility. This is what the market is considering a fair auction at this stage. But again, short-term traders, you got something to lean on. And pretty much intermediate-term traders, too, stops below there based on your appetite for risk. Whew. And if you're noticing the beard here, it's not because I'm not shaving. We're trying to transition at this stage into another phase here. I'm in North Carolina. It's still 95 degrees, but the impending cold weather is coming. This does affect my I saw something that I'd never thought of, actually. To finally get in the girls' locker room, I saw a guy who had claimed now with all the Bruce Jenner stuff, a transgender, move, and finally got in the girls' locker room. I never thought of that one. I commend him. Let's take a look at gold really quick. Here we go. All right, so obviously 1125 is, with a little bit of noise, is held here. But remember, we're in a hole in the marketplace between 1125 and around 1160, 1168. All right, and why is that the case? That's because there's that 68 up there. And there's the 60 was on the weekly, but right now there's not a lot of places that institutions and commercials or whatever pick battles in this area. And we talked about this ahead of time. That's why we're all over the place here. Not a lot of direction in gold, even though we have kind of held up here. The good news is for longs, it seems like 1125 is kind of the Maginot line on this one right now on the bottom, and then you got 1160, 1168 up top. We could rattle around in here, but I don't really, think there's a lot of high probability situations you've got on your side to trade this. But you can look towards the ultra short term. This is our 60-minute, very tight boxes, nothing really going on here. Here's the 240, which I prefer to. I'm sorry, that's the daily. Excuse me. There's the 240. 1145, 1129. So got a pretty good floor. 1125, 1128, 1129, but then you've got a little bit of a ceiling at 1145 on the short-term trade on on the short term on gold. So let's kind of cruise through the globe here and see what's going on before we start looking at the U.S. markets. We're going to kind of pull up the Shanghai again, and the volatility's here. You've got a pretty serious, broker mandate from the government here. Buy equities on margin. Prop it up. This probably won't end good. Again, here's the big area, 35.54. We're below there, and that's the story. Let's take a look at the Nikkei really quick. This is the one that just got demolished yesterday. Here's the situation on the long term. Nothing really to talk about there, but here's the ultra wide box. You got 17,521 down below, just kind of cruising around in here. Not a lot of direction. And, I want you to see how this works out. I mean, we had the new box appear, the orange bar, got right into that area. I mean, these are inflection points to significantly pay attention to all the time. 19,279. These are all in the scanner. They're always going to be there for you. I'm showing visuals a lot on charts, but here's a 240. Just no direction whatsoever. So the S&Ps, we're going to get to that in a second, will be in the same camp. And I'm still biased towards the short side in the S&Ps no matter what happens. Here's the DAX. We talked about this yesterday. Big number, 1039 up top. Hit it pretty much to the tick. And these are really great examples. The crude oil example, the Shanghai example after we closed below, retested at 35.54. DAX. These are great examples of let the market come to you. As Basil said, sometimes the best trade is doing nothing. That's a trade in itself. So wait till you get to these inflection points. I know it's hard to sit there and watch this stuff all day. I do stupid things with a button in my hand too. But again, let the market come to you. Do the risk reward thing that Tom and Tommy always talk about. And you'll have the odds in your favor. Let's take a look at the dollar. 95.30 is still the big number here. Why? 95.27, 95.30 sitting there. We kind of came down. As you can see how that works. On the inflection point, pick the battle, place the stops. Remember, we always talk about playing defense first. Play defense first. Here's the euro. Not really being that kind to me right now. I thought we were going to bust down and stay below 112.26, 112.07. That didn't happen. Still waiting for the closes below. Going to turn the wrench the same way again. I got clipped a little bit there. No big deal. Trading. Still waiting for this to cave in and start having some closes again below 112.07. Why? That's the tipping point on the long term. There it is in the scanner. And it's got a little bit of a it's got a rhetoric section in that scanner. And I don't know why I'm not showing you the scanner right now. It's pretty stupid. Let me get this thing up for you so we can look at it in a little bit. Australian dollar. I hate to sound like a broken record, but there's really no end in sight in this thing. Will it have spikes up? Without question. But, profile is appearing above. This is, I've talked about one of the best trades on the books, Australian dollar. I've also talked about the Japanese yen from the long side for a long time. But right now, the yen, the worm is turned, and you got to wait. You can't really, in my opinion, do a lot with this right now. Here's the long-term weekly. Here's the daily. Obviously, the first break that happened, we use this for stops all the time. Get below this 123.70. 68 area, then we just got to sit tight. I'm not a big fan of going short this product, so that's the story on the yen. And we're going to take a look at a couple other bellwethers here. Let's take a look at the 10-year. Again, this one's near and dear to my heart. But if the market continues to sell off, the stock market, that is, the U.S. stock market, and this thing kind of can't get out of its own way, not going to be good. So again, 127.11 into 14.12, that general area. I love it when these things line up here. So that's the situation on the 10-year. Let me read over here. Gotcha. Damn it. Did I pull up the wrong? Have they? Okay. My fault. Let me pull up December. Thanks for alerting me to that, John. Similar situation, a little bit tighter, 127.11 on this contract too. Somewhat similar situation on the long term and the intermediate, still around that 127.11 general area. I'm going to move on real quick here. I want to cover a couple things for the first break. We talked about crude oil. We talked about. I want to pull up the XLF really quick. All right. So we talked about this yesterday. We've looked at some banks. We've looked at some breakdowns. Right now, let me just see where we are pre-market here. If we do have a print, let me see. Not yet. All right. ETF's not trading yet. Remember, this is kind of Custer's last stance for this again for a possible new washout. We got the market gapping up a little bit. You guys know that. Futures are up. So the big number on this, 2261. I was a huge fan of this thing at some point getting crushed, and got stopped out a couple of times on trying to short this thing before. And this is a good example of waiting for the breakdown. That's happened, but you got a new serious inflection point to pay attention to. That'll be a lid if the market continues to sell off. The place stops above. Again, we got a little bit of a gap up going this morning. Let's take a look at the S&Ps really quick. We got about a minute left before the first break here. Just a big, massive wave down yesterday. Don't have to tell you guys that. But the cool thing is you've got a nice area of resistance still. And we've been talking about this area, 1945, 46, 47, 48, that general area. That's where we're at. This is our 240. Nothing to hang on to on that daily or weekly. So these are the numbers to pay attention to. 1906, 1946, 47, 48 up top. I know that's a massive range. I just spilled water on my computer. That's nice. And as we look into ultra short-term 60, these are the numbers 1923, 1935, 1936. So again, I wouldn't do anything. Short-term traders, ultra short-term traders, you're going to have to hit one of those levels to kind of take a stance, and then the 240s are outside of that. So you got some areas to pay attention to on this. Where do I think this thing's going? We've had the sell-off. I'd love to see this thing consolidate down here and then take another shot for the lows. And, Joey was on this show, 1750s in his mind. But again, don't get crushed by hanging on to something without having the stops in. You can always get back in the trade. And right now, those inflection points are something I pay attention to on the S&Ps. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And what I was doing on the scanner here while you're gone, just pulling up some instruments that are just still hanging above their daily profiles, showing above the balanced area on the intermediate out of the S&P 500. I know we're showing on our breadth situation, we're showing 20 stocks above and 263 below. That's quite amazing, actually. And inside 211. So the middle ground is actually starting to build, and that actually happened yesterday, which is a little concerning. And you might say, well, God, why are you showing 12 or 13 stocks here? Pre-market, we've got some different numbers going on, and the data feed again is trying to adjust itself and printing daily, records from historicals from eSignal. We use eSignal to power this thing, which is just an insane data vendor, by the way. Love those guys. This is going to kind of shake out before the market. Remember, these numbers are based on the internals, which need to be printing. And with the futures kind of ratcheting up here, we just went through that. We're obviously going to have some adjustments this morning, some stocks, opening, and these numbers are going to be flip-flopping around. But as of yesterday's close, for sure, Kraft Foods. Let's take a look at Powell Corp. We're going to take a look at Seagate Technology, Windstream Holdings. Some of these, I want to pull up L Brands, LB, and I'm going to pull this up, just kind of let me just pull it up first. Weathering the storm, not terribly bad in the latest, pullback this past week. I mean, this one to me, I really like this situation for a possible little bit of a lurch forward. And, what can you expect to get out of this? I mean, long-term guys are going to be like, okay, I call my broker or I go to whatever website. I got to factor in commissions. But, this market, the reason I'm saying this is this market, I think you've got to be nimble. I think you more than likely should be continuing to look for short opportunities for a while. That's where I think the leverage is. That's where I think the vacuum kind of pullback is going to happen every once in a while. Of course, we're going to get big rallies. We're going to get gap ups. But on L brands, you've got 83.44 sitting here on the PSC. You got a little bit of a 3 or 4 point move up. Maybe this thing could get past 86.43. Remember, that's your initial target. But you got that 83.44 combined with this 82.36, and I like the way this thing's kind of breaking stride here. I mean, it's starting to show itself. Remember the Alamo, but remember crude oil. And I'm going to learn to say that right at some point, Al. We had to have a little bit of technical damage, and then some people had to start covering. Might be a nice little situation here on L brands. Keep that on your radar screen for a long play. Put a gun to my head. Let's take a look at Kraft Foods for a second. And did we change symbols on that? Hold on. KRFT. Why is that not coming up? We'll come back to that. I don't know what the deal is. Let me alert my tech guys to that. Sorry. Maybe I'm typing it in wrong. I'm not sure. Let's just move on. Here we go. Let's take Hospiro, that's been on the long screen for a while. HSP. A lot of these funds can only go long. It's like in their charter. They can't go short. I guess they can buy hedges, but, a lot of these guys have to find such. Damn it. This is relatively not tradable. Yeah, I mean, this is nothing I'd take a stab on. Let's move on. That was just an idea from the. Let's look at Powell Corp, PLL. Sorry, guys. I don't know what's going on here. All right, I tell you what, we're going to check on all this on the break. I've got a tech guy on this right now. Let's take a look at Phillips 66, PSX. Am I typing in something wrong here? Okay. Here we go. All right, we're going to come back from break and hit a couple of these instruments a little bit harder here when we get back. I'm going to check on some issues here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, guys. Tech Guys loaded a little bit of an older symbol list this morning. The scanner, they're clearing that up right now. It's not too much older. It's a couple months older. So, again, had a couple of symbols that had changed, and the file didn't recognize that. But that's like less than 1% issue there. Take a look at Hess. This was on the list. Obviously had a little bit of a bump up with this rally in oil, 56.23. But, what do you do with this now? There's 56.82. Again, broke stride, just like a lot of oil products and crude oil itself. We're going to come back to that in just a second. I want to take a look at the XLE really quick. And we're going to focus on some oil stocks for a little bit here. All right, so again, XLE couldn't get out of its own way, reached, as oil was climbing. This was your target-rich environment, as it always is on the long term. 67.40, we're just kind of languishing below there now. Not good. Crude oil still showing itself as looking at that 43.5 area that we talked about, the pullback that's happened from around 48, 49. I'm actually still a buyer of crude oil on that pullback on the intermediate based on that POC on the weekly too. But as you look at the XLE, a little bit weaker than crude oil in general. I'm going to just kind of take that for what it's worth. Crude oil could come back into the 40 range, but let's take a look at crude oil one more time before we make all these assessments. The reason I'm looking at this the way I'm looking at it is got the top of the hill here that we need to stay above, but I'm looking at it as we could go back and retest the highs just to kind of, rattle around up here above these profiles. Remember, when you break stride and close above, the markets come back to you. This may be a trading opportunity. So looking at the XLE in general, we may have a little bit more of a move back up and retest get this to click on here. I think best case scenario is on the XLE right now is you could go back and retest 67.40. So I'd sit tight on, shorting any of these oil stocks right now. Just sit tight and wait just a little bit. You might have a couple of days grace period in that. Let's go back to the scanner for a second, and let's go into the XLE. And what I want to point this out. I mean, I'm looking at the indices. This is our long-term weekly view breadth, net positive or net negative situation. And as you can see, the entire globe really turned red and has stayed red on the long term, ultra long term. Here's the daily. There's a couple indices that are showing some form of hanging in there. The TISET 100 for one of them is showing but the rest of them, these are all smidgets positive. Shanghai just, not even registering basically. Here's the 4 hour, and here's our 1 hour, especially after yesterday, the damage. But we always talk about this. Let me pull up the S&Ps. Where we're at. Here we go. In volatile times, you're going to have to do this. You're going to have to pay attention to what the short-term breadth is, and you're also going to have to pay attention, where the long-term breadth is, but you got to pay attention to the inflection points, and that's why we bring up those inflection points every morning. This has been 60-minute as a trading system in itself. I'll just take out the middle ground. Remember, 8:31 we started crossing over again, or basically we started crossing over at the beginning of 8:31 at 9 in the morning, and that was after a crossover that had happened 8:26 on the long side. This is a trading system in itself to pay attention to, but remember the long-term inflection points and the long-term breadth is. Let me go back to this. The long-term breadth gives me reason sometimes to pass on these opportunities on the long side because I'm looking for areas to short because of that long-term leverage showing that we've got some odds in our favor on the short side. So it's okay to miss some of these rallies at this stage. If the market rallies like it did the other day, or from the bottom to the top, yeah, you've got some short-term trading opportunities, but all the time up, we were trying to pick battles. We tried to pick one at 1945. We tried to pick one at 1986, 87. That worked out very well, but remember, it's lose a little, lose a little, lose a little, make a lot, and that's the way trading. That's the way the biggest traders in the world operate. They will take small losses, and they will. It's easy theoretically to say, I understand that, but again, just trying to hammer that home. You're not always going to be right. I'm not always going to be right. Here's the S&P 500, just gazing at it relative to breadths on all time frames. As you can see, when we open up this morning, it's going to be a little bit different story. But let's go back to the ETFs for a second. Here's the 1 hour. Here's the 4 hour. Here's the daily. And here's the weekly. And as you can see, and if you run this scanner and these stocks open this morning, you'll be able to notice how these ETFs react. But what I want to do is I want to go into the XLE. That's the least damaged one right now on all time frames. So what we're looking at here is if we consider crude oil that maybe in a situation that may be in a bounce opportunity, I want to look at Phillips 66 again, PSX. I like this. I like it as a long opportunity. Put a gun to my head. Here's the 77.58 sitting here. We pulled back into that inflection point, and we've got some other support down here. If we get a bounce in crude oil, and this is one that hasn't really been technically challenged along the way, I like this trade, and I like targets above at 82.19. All right, you got a nice little risk reward there. Keep your stops in. We get a bounce in crude oil. This could be a nice little situation. Very defined. All right, let's go into some other XLE stocks here. Let's see, Halliburton. Let's just take a look at this one. HAL. And I'm pulling these up because I'm looking for green situations here. All right, so it looks like if we get a bounce in crude oil, we have an opportunity. We're trading about 38 right now. We've got 43.07 up top. That's your initial target. And you got to put stops down below 36.79. We're trading about let me see where we're at pre-market here. Ooh, 38.56. Damn it. Oh, excuse me. Shoot. Gapping up a little bit, but remember, you can place some stops oriented below 36.79, and you're looking ultimately for a bouncing crude oil and a target up top of 43 on Halliburton. And that's the beauty of this scanner. I think it just makes things relatively black and white. You get to find some opportunities. Let's look at CAM. I don't like this peel back on the 12 days up. Let's just take a look at this. In fact, it says caution to longs on the intermediate. If you go over here and pull this up. But let's take a look at CAM and let's just view it. Well, yeah. That's something you got to stay away from. CNX. That's obviously, I'm not keeping up with the news of CAM, but there's something obviously news driven. Here we go. We're just looking at technicals on these things right now. I have no idea what the news was on CAM. 1562, we've met that this week, and this is one that's obviously been underperforming. So, what do you do with this now? Let's just kind of keep drilling down. A little bit of a technical reason there. But, we've hit those. Again, this is, if you're into oil stocks, you got a technical breakout there. Obviously, oil didn't hinder this, but you've met some targets up top now at 1562. So the way I'd look at this is, we could rattle around here. This stock has been underperforming as hell. Let's take a look at this. This, if you guys are holding this, I know you know what I'm talking. 45 down into 15. That's just death. But the good news is on this right now, you might have a really serious trading opportunity with the weekly close above 1562. And if crude oil keeps, squeezing some people up top, and remember, I think we were trading 38 the other morning. I think we reached out 49, maybe 38, 37, 39. What is that? A 25%, 30% move in crude oil in a couple of days. We're going to have pullbacks in that, but thanks, Terry. I'm pretty sure that was a takeover situation. Those are things you just kind of stay away from. Technically, they just don't make sense when those things are going on a lot of times. So thank you so much, Terry, for adding that comment. It says that's Schlumberger's buying CAM. Weekly close above 1562. Right now, we're still in rattle around mode, but it has started showing some green shoots here. And I'm going to go back to our daily. This is a situation on CNX, Consol Energy. All right. And these stocks obviously have been beaten to crap. So, it's a nice little sign there. Scanner lets you know it was breaking out. Let's take a look at HES. All right, so this is the weekly situation on HES. 56.23 down below. 56.82 sitting above, starting to show some technical reasons. You might have a little bit of a pop in this, a little bit of a trading opportunity with stops below those numbers I just spoke of. All right, let's take a look at NOV. Just had my video card freak out. Let me reboot the video card. And I'll reset my screen as soon as this whole thing resets. All right. Yep. Let me reset this. You guys see my screen again? Ow. Cool. All right. Back in business. NOV. Kind of like this, actually. I know, again, this is something that's come down from 88. And, with crude oil doing what it's been doing, we've had opportunities to continue to sell this, believe it or not. Crude oil's showing some signs of technical damage. And, we had talked about before using the XLE, just like we did in March recently, to try to find a bottom in crude oil. Happened a couple of days later than what I was thinking. But, now we've got a new profile that's attempting to appear here on the weekly. You've got some technical damage that happened to the shorts here. You've got a little bit of a floor here at 40.21. This might not be a bad little opportunity for another lurch forward with stops below 40.21. And again, these are all, let me get my scanner over here on the right screen. These are all, let me get back to NOV. These are all sitting here right in the mouse over. So there's that 40.21. There's the peel back. There's the new profile attempting to appear. Here's our landscape view, and there's that 40.21 right there. We need to round that off. This is okay. All right, sorry about the round off there. We'll get that cleaned up to 2 decimal points on these stocks here. Sometimes they slip through the radar screen, but that's the situation on NOV. Let's look at RRC. Again, we're focusing on XLE stocks, RRC. All right, kind of a similar situation here. Weekly, new box attempting to appear, crude oil sitting where it's at, a little bit of a bias alongside there. Let me get this latest screen. Okay. All right, so good news is 36.99, very similar to NOV we just looked at. Might have a little bit of a pop opportunity here. Where's your upside on this? Maybe 44 in that range. Stops below 37. Got a super call it quits below 35.60 on this one. But again, I'd love to see this new profile lock in and give us a little bit more information by Monday morning next week. Let's take a look at a couple other things going on here. Let's just let the scanner do the talking for us. Okay, so I'm looking at some green shoots here. We've got all the XLE stocks up here, and let's take a look at NBR. All right, so again, new weekly profile attempting to appear. Not as relative strength terrible, but again, this is a $10 or $10 or $11 stock. So you got 976 sitting down here as a stop on the long-term, got to say, uncle situation. You might have a little bit of a pop up into 12.50 from 11 here, but you want to get back above 11.14 on this particular stock. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. I want to pull up some XLF stocks. Man, I'm kind of appalled that this is this ugly. I mean, just all across the board. I mean, there's really, not a lot of green shoots here for any reversals. We got some, pressure points that were out on a couple of these stocks. If you look at them, I mean, you can see these right in the landscape situation, affiliated managers group. But let's take a look at some bellwethers. I want to revisit JP Morgan. I want you to see, in a market that's going sideways, we get pullbacks. We look at strong instruments, and you see where that, the Goldman Sachs, the JP Morgans, the Citigroups were all sitting at these areas, strong stocks in a market that pulled back a little bit. This was back in early July. These provide battle point areas, if you will, to, place trades. Now, conversely, we close below, the technical damage happens. I feel like I'm in the Philippines. There's bugs flying around me. As the technical damage happens, the close below, watch this. Check this out. 64.70, go back, hit it to the tick in the same vicinity as that weekly unfair low. These are strong DMZs, if you will. On a breakdown, go back and retest situation. I mean, and again, we've been bearish on the market. These stocks showed their hand. Remember, you use the scanner, you can look at all your favorites. We can also have this thing pick out things that are happening now. And market continued to rally for a couple of days, boom, and then this thing showed its hand early, and then you got the stops above again, thinking defense first above 64.70 coupled with 65.27, that DMZ. That's talk about black and white. All right, so what do you do with these things now? So pre-market looks like 62.40, and we hit some targets down below, as you can see on the 240s. We always let the 240s regulate the trade down. So again, there's 64.73 up top. That matches 64.70 on the daily, and that 65 and some change on the weekly. And I've said a lot of numbers and a lot of levels. At some point, I'm going to be right. I know throwing out a zillion numbers. But fact of the matter is, stops above 65 on this. I still think we've got some downside. I know we're trading 62 right now. I don't like this trade unless it breaks below 61 or gets back up into that 64, 65 area. Okay, if you can see how that works. Let's take a look at Goldman Sachs. These just all have the very, very similar situations here. Goldman Sachs even weaker. Let's take a look at Citigroup. I always think somebody's behind me. The TV's. So that's the way it goes when you live a life like mine. Here we go, 53.59. Again, just as the market kept going higher, didn't want to cooperate, sitting right there at those inflection points. And I've got about a minute left, so I'm going to pull up the scanner. And I'm going to say, if you want to find situations like that, you can go in here to the XLF. I'm looking at the XLF right now. I want to find some things that are sitting at some bottom inflection points that have rallied up back into it, or possibly sitting below. You can see these on the charts, and you can look at them on, you don't need basically our indicators, especially on the box situations. I mean, these inflection points, you mouse over them, there they are. And I can similarly do this. I can find tops here. There's none of those. I knew that was going to be the case. And I can also look at situations on our weekly of breakdowns. AIG, HIG, TRV, Travelers. Guys, you've been great. Stay tuned for Larry. Stay tuned for all the hosts on TFNN all day. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.